Hey, this is Justin with daytradethemarkets.com. It's Thursday, January 9th, about 10:20 a.m. Eastern Time. I got into a short trade a couple minutes ago. Isn't going in my favor at this very moment in time, but I feel like it's a pretty nice setup, so I thought I would just throw a video on here and share it. And let me explain what I'm doing here with this thinking. Okay, so heading into the day, just to give you some background, heading into the day, our bias is a little bit mixed, but shorter term, it was down unless we could get above this 1834 area, which has been a pretty major level for us, kind of a determining level for us in terms of whether this market's going to head back higher or stay lower. And what happened overnight is we tested that 34 area. Let me bring the this is the overnight chart here of the ES on a 3-minute, and you can see here excuse me, fighting a little cold here. Here's that 34 level, where yesterday we couldn't get really above 34, and then we didn't do it, and then late in the day or in the European session we had this really strong move on some extreme buying aggression up to around 39 in the overnight, and we opened above 34 here, as you can see. When we opened. However, since we've opened, now we've stayed above 34 for an hour or so, not quite an hour, but so it's telling us the market's trying to accept price above 34, but the only major structure that we've had so far here, and this is another level up here around 36.75 that we wanted to monitor for resistance, and I can show you that in a minute as well. We've got this level 2 or strong selling aggression and another strong selling aggression. So this 37-ish area here that we were looking at as bigger picture resistance, it has attracted some selling. We've only had really moderate to weak buying that's come in, and we couldn't get back above 37. And then when we tested 34 a third time, we busted through it here on some level 3 or extreme selling aggression. That's that magenta bar there. And we also had some of these high velocity selling moves. So it's telling us some really strong selling has come in, and this market is having a hard time staying above 34. So if we can get below 34, and that's kind of the context we like to look at, this market could sell off, and our next level down is 28 and then 26 that we like to look at bigger picture. So that's our first signal, but I didn't want to just jump on that because again, this market is a bit mixed. When this second level 3, this another extreme selling aggression bar came in here a few minutes ago, that's when I said, okay, this selling below 34 appears to be for real, so I'm going to throw an order in. This is one of probably my favorite order to throw in. It's what we call a level 3 retracement, where I put a limit order in a tick below the low of this, a tick below the high of this selling level 3 extreme aggression bar. They're at 32.75. I just put a 2-point stop in. Ideally, my stop would probably be above this other level 3 buying aggression bar. I didn't want to take 3 points of risk on this trade. I figured if this thing's going to sell off, this 34 area should hold, and that really wouldn't have been a bad place to get on board, is right below the 34 level, thinking they would come back and test there again, and kind of catching the sweet spot here between these two level 3 bars. But I didn't want to miss out, so I put an order in there. I'm willing to take 2 points of risk on that trade. I've split my order. I've got a 5 contract order, not a huge order, but certainly reasonable. The first 2/5 of it, I put at the low of this level 3 bar, because that's the first expectation that we would have. We would expect this is where extreme selling came in, so we would expect that the high of that, if it was tested, the sellers would maintain or protect that area, and at least as a first expectation, send it down to the low of that bar. So haven't quite gotten to 31.50 at the low of that bar, but that's my first target. If and when that gets hit, I'll probably move my stop down a little bit. I'm not going to move it down too far. I want to give this some room to run. My next part of it, I've got a few choices. I can either leave this at the 28, which is our next level down, or I could move it down. I'm going to just move it down out of the way, and then probably trail my stop down if this thing goes in my favor. I want to see that my first target gets hit first, obviously. And when I talk about these bigger picture levels, let me bring over our the daily report that we do. Let's see here. So we do our daily report in the ES. It talks about some of the key levels we want to look at. overhead resistance is 34. That's our short-term bias intraday. Short-term bias is down. If we can get above 34, that would shift the bias to more of a transitional up. So the 34 is a big level for us. We also want to monitor the 36.75, like I was showing you up here, and then below that 28, and then 26, and then 17, and so forth. So what I do is I just draw horizontal lines on my chart there. 34 is that big level. I made that, darker red. I put the level here, 36.75, that we want to monitor, and then 28 and 26. So again, what do we mean by when we look at those levels? Well, we want to just keep the market in context. So if we can stay below 35 or break below 34 like we are. Okay, so first target was touched. It wasn't filled yet. I'm going to leave my stop. I'm going to leave my stop basically where it was, especially if I can get filled here. Thinking that I'll have made 5 ticks on 2 contracts, I can risk. I'm still willing to risk a little bit more and take a small loss on the trade. I'm just not a big loss. I think I want to give this as much room to run and let this thing stay below 34 as much as I can. If it gets back above 34, though, I'll be willing to take a small loss on that. Hopefully, I haven't gotten filled here at 31.50, but that's it's kind of my thinking at this point. So I was saying, when we talk about our bigger picture, these levels, ideally you want to stay in flow with the context of the market. So if you can be with the bigger picture bias, that's great. You've got more time on your side. And if you can, for example, if you know that 36.75 is potentially some resistance, then you would want to avoid getting long at that level, okay? And it would be a level where you think, okay, I'd consider getting short. Same thing down here at say 28. If the market can get down there, that's a level of potential support. So it's an area where you may consider getting out of any short trades, or you'd want to be careful getting into a short trade. Okay, you wouldn't want to necessarily just initiate a short trade at 28. You would want to be careful because that's a level of support. So these are just areas that help you with context. And I guess while the market's kind of waiting here, let me 1 second. I'll bring up a couple of other images here, just to give you a little bit of a background. This software is doing a lot in real time, and what it's mainly doing, we look at this as pieces of evidence, or pieces of the puzzle, if you will. And so we've got pieces of the puzzle, and the more of these pieces of the puzzle that come together, the more evidence we have to support a decision. So we've got these relative aggression bars, and I can explain that a little bit more as well, and high velocity moves. Those are really telling us which side in real time, under the surface of the auction, in real time with the order flow, with the time in sales, which side is really in control of this market. Then we have support and resistance zones, deceleration and divergence. We have a filter. Then we also, like I was talking about, the bigger picture bias and bigger picture key levels are a very big part of that. So and to go a little bit more in depth about what these relative aggression bars, this is kind of the crux of the first building block, if you will, of what we're doing. And I'm watching my trade on another screen as well. So these aggression bars are telling us which side, buyers or sellers, is more aggressive with the order flow, or seeing under the surface of the market which side is more aggressive than the other. If buyers are more aggressive in the short term, or if sellers are more aggressive in the short term, that's what moves the market. If neither side is more aggressive, the market's going to be stagnant. It's not going to move. But if one side collectively, buyers or sellers, is more aggressive, it's giving you a very good handle on which way the market's going to move. So we've got these level 1, level 2, and level 3 bars. So moderate, strong, and extreme buying and selling aggression bars. And we really want to focus in on these level 3 bars especially, and these level 2 bars to a degree. Those are going to give us a really good handle on kind of I guess you could say, a roadmap of the short-term direction of the market. So if we go back and look at our chart here, again, our bigger picture bias, if we can stay below 34, is more short-term down. Okay, so that's one thing. Here's our filter. It's turned over to red, and strong red. Okay, we've got bigger picture level here at 34, 36.75, down here at 28. We want to monitor those levels. In terms of our aggression bars, we've got some strong selling aggression bar that came in off of this 37 level, and then some extreme selling aggression that came in as we got through 34. Okay, so that's telling us that in the short term, which side is more aggressive. Sellers are more aggressive at this time. So I've got a filter that's telling me that I'd rather be short. I've got the aggression bars telling me I'd rather be short. I've got bigger picture bias below 34. It's telling me I'd rather be short. So in other words, I want to be careful getting on the long side, and I'm more confident, more comfortable being on the short side. Okay, that's all those pieces of evidence coming together. So then you decide, okay, once you decide which side you don't want to be on, that's what I look at as kind of step one. And then step two, which side do I want to be on? Well, I want to be on the short side. I don't want to be on the long side. Can I find a good spot to get short? And like I said, I like this level 3 retracement trade idea where you've got the level 3 bar, try to sell near the high of that level 3 bar. Now I took a point of heat on that trade, but so far, but it's a trade I really like because, again, I've got a lot of things coming together for me. I'm below 34, bigger picture bias is down, filters red. All of my major aggression, level 2 and level 3 aggression bars are controlled by sellers. So I feel like that's a pretty low risk, high reward type of a scenario in this case. Now, I would certainly I wish I would have gotten filled there at 31.50, and I certainly want to see this market sell off pretty quickly. It's stagnated here for a good 10 minutes. But until I see some evidence to show me that I'm wrong, in other words, until I see some buying above this level, I might get out, or I'm going to just get hit with a 7-tick stop. So we'll see. I'm willing to take that risk. I feel like the opportunity is greater than the risk, in other words. So hopefully that makes sense, and hopefully it makes sense why I took it. And there's a lot of other videos on the website. Click on the I think it's called the How This Works link. You probably see that above this. If you after this video is over, if you want to see more information on what all these pieces mean, we kind of build a chart piece by piece and that sort of thing, and explain each of these individual pieces of evidence a little bit more in depth. So hopefully that makes sense. What I can do right now, we're at 11 minutes on this video. I will pause the video here briefly, and well, looks like we might be testing the 3150. Let me give that another couple of seconds here, and we'll see if we get 3150 tested. Well, you know what, I'll just pause it and then I'll restart the video when something happens or when I want to talk about a decision and that sort of thing. All right. Okay, so I just had my first target hit there at 3150. So what do I do with my stop? I'll bring it down a tick above 34. So I've got still got a 6-tick risk on 3 contracts. I've made, so I've got a 18 ticks of risk out there, and I've made 10 ticks of profit on 5 ticks on 2. So I've got a point basically of risk on this trade. I'm willing to not bring it to break even at this point because I feel like there's no evidence that tells me that sellers are not in control at this point. If I start to see buyers come in, then I can adjust that and make it a break even type of a thing. But at this point, I'm just seeing that sellers are in control. Again, we're below 34. We did so on some really extreme selling aggression. We've held below 34 to this point. We've done what I would have expected our first expectation to be, which is the high of this bar was tested, and now we've tested the low. So everything's kind of in line. There's no reason for me to to get out. The only decision I would have to make is, do I bring my stop tighter so that I have a break even? And I try, and this is hard to do sometimes, and it's easier when I'm doing a video because I have to really explain it. In fact, even though you might not be talking to anyone, doing a video like this to yourself where you're narrating it can really help you, because if you kind of imagine yourself talking to someone or explaining it, you're less likely to do stupid things. So in other words, if I'm not on a video, there's a chance I'd be thinking about the money side of it, and I would say, okay, I need to bring my stop to a place where I have a break-even trade so I don't lose money on this trade. There's nothing wrong with that. That's not a bad way to go. But again, the ideal way to think about this, and the way that I really try to think about it, and again, because I'm doing this video, it's helping, is what's the evidence telling me? Is there any reason to not be in this trade? Is there any evidence that buyers have come back in? In other words, is the reason that I got into the trade no longer valid? Well, the reason I got into the trade, as I explained, is that sellers seem to be taking over with this aggression and extreme aggression. The filter, we're below 34, the 37 resistance held. I don't see any reason that that why I got in is no longer valid. If that changes, I can get out, but I'm willing to still have a little bit of risk on this trade because, again, I feel like the reason I got in is still valid. So hopefully that makes sense. I'm going to go ahead and pause the video and then come back on when more happens. Okay, so we are breaking lower. here, as you can see, we're down below the low of this level 3 bar. We're doing so on some level 2 or some strong selling aggression. So I mean that's a really good sign. Let's see here. At this point, I think what I'll do is I will bring my stop down a little bit, because in theory the high of these level 2 selling bars should act as some good resistance. But I can start trailing my stop a little bit. I've got some good profit in here. The next choice I would need to make here is, do I put my target in there at 28? That's our next level down of potential support. Do I do it at 26? Do I just keep it out of the way and trail? And what I think I'm going to do is just move it out of the way and then trail my stop, or wait until I see some buying coming into the market. But I certainly want to monitor what the market does there at 28, and if I start to see some buying that comes in at 28, or some selling that doesn't have follow through or that sort of a thing at 28 or at 26, then I would certainly get out of the trade. So I guess my strategy at this point is, if this market heads higher and takes out this 32.75 by a point, I'll get out basically a break-even trade. If this thing heads lower toward 28, I'm going to monitor very closely what happens and see if I need to get out of the trade at that point. If sellers maintain control, I'm just going to try to hold it as long as I can. So that's my thinking at this point. All right, I'll pause the video because it's getting a bit long, and I'll come back when there is more information. Okay, so now we are down to 28, and we've done so on this level 3 selling aggression bar. And so at first glance, and certainly I think it's the case, that's a good sign. But what you'll see with level 3 bars is, 70% of the time or so, they're the beginning of a vertical move. However, they can also, 30% of the time be a capitulation type of a thing. And since we've already moved down nearly 10 points off the high from the day, and we're getting another level 3 bar, there's a chance this is capitulation. So I want to protect that a little bit, and I will lock in 2 points of profit on that. If this market can take out the high of this by a few ticks, or if some buying aggression starts to come in, some level 2 type aggression or higher starts to come in, then I may bail a little quicker. But hopefully, the high of this level 3 bar, that would be the expectation, that the high of this level 3 bar right in here should act as some resistance. Let me make some more space. It should act as some resistance and sell off some more. If that doesn't happen, well, that's a clue that I may want to consider getting out of the trade. So hopefully that makes sense. We can just kind of monitor what happens here. I'll pause it and continue when something happens. Okay, so that last bar was also a level 3 selling bar. So I would expect that this market's going to continue lower pretty nicely. The expectation would again still be that the high of these 2 level 3 bars would hold. So So what I'm going to do is just put my stop a point above the high of those, so that the level 3 bar here, I look at these as kind of the same bar, is at 29. I'll put my stop a point above that as kind of a trail. You know, I think this thing should at least go down and try to test 26, but if not, if this is the capitulation and we do find some support here, at least the fact that the level 3 bars have their high taken out by a point will be my first clue as to that happening. So again, hopefully that makes sense. But you know, that's, while I'm talking about that, that's what I think can be very helpful with these aggression bars as well, is they can really help you manage trades, I think, more effectively than just, you know, with your gut, certainly, or more effectively than just, you know, using a price-based trailing stop. I like to look at it as you've got evidence of what the aggression is showing you. So if you're in a short trade and there's no evidence that is abating, so in other words, no strong buying comes in or no selling is rejected, then you can just hold that trade knowing that you're still on the right side of the market. Okay, versus if you're just kind of wishy-washy about it, or trying to trade from your gut, or trying to trade from the fact that you're want to make a certain dollar amount of profit, that's not as effective as actually having evidence. And so, I mean, there's actually quite a few people that, they may have an entry method that they use. You don't have to use this for entry, but they use this to simply manage their trades a little bit better and lock in a little more profit than they would have otherwise, and so forth. So that's the thinking at this point. So what we've seen here is, this is pretty minor. We've got a deceleration, so it's telling us that, a little bit of buying's coming in. We've got some moderate buying that's come in. That's moderate buying in the face of extreme selling. So it's kind of like, I don't know. Extreme selling is a punch to the face, and moderate buying is a little punch to the stomach. Okay, if you're using a boxing analogy, which I don't know why I did, but that's kind of the idea. So there is a little bit of it's kind of a jab with the buyers, but there was just a roundhouse knockout punch by the sellers with that level 3 bar. So again, until that level 3 bar is taken out, I'm not going to make too much of level 1 bars, and I typically don't make much of level 1 bars anyway. They're just a little bit of extra information. They can sometimes give you a little heads up, but you just don't want to put too much stock in them. The real thing we want to watch is these level 3 bars. Can the market stay below the high of those? And so that's why I've got my stop there at 30, and we'll just wait and see. Now, if some buying does develop, well, I'm protected, and at least I'll be able to see that and get out of the trade. So all right, I will pause this and continue when there's more information. Okay, so we have a level 3 buying bar that has come in. You can see right here, and that's after we got down to 26. We decelerated at 26, and some level 3 buying has come in. Now, I still, until we can get, I don't want to say this, I want that level 3 buying to prove itself, and so that's why I've got my stop tighter here. It's about a point higher than the high of that level 3 bar here. And so, I've moved my stop even lower. You could even make a case for putting it, you could make a case for getting out right now, because again, this is an area here between this 26 and 28, if you will, that we notated earlier, that, could be some support. And it looks like the buyers are trying to step in. I want to kind of see them prove it before I really get out, but they're trying. Okay, so this market is gone more two-sided, and so that's why I've got my stop there tight. So if this buying level 3 bar has some follow-through, okay, that's showing me that buyers really are coming through, coming into the market. Otherwise, I just want to keep my stop tight. A little tongue-tied there. I want to keep my stop tight and lock in as much profit. So I've got a 4-point profit locked in, worst case, and we're, like I said, this bar here, the very next bar after the level 3 buying bar decelerated. So it's, potentially, let me make that a little tighter. Potentially, this thing will reject and head lower and try to take out 26. We'll see. Okay, there's a level 2 selling aggression bar. So, that is a possibility. What I'll do is I'll just get this out of the way a little bit more. But I want to be wary, if nothing else, because this market is getting a little. That's our first, buying aggression bar of any kind. Okay, was that level 3 bar? Doesn't mean buyers have come in or are going to take over the market. It's just our first sign that a few people are stepping in. Okay, now will they get their stops busted out and we head lower? We'll see. But collectively, a few people are starting to step in at this area of support. Now, some sellers are coming back in here, so we'll just kind of wait and see. But that's actually a good sign for my trade that the buying that did come in didn't have any follow through. It actually decelerated on the next bar, and now we've got some strong selling that's come back in. So we will see here if we can get through this 26 to 28 level. And then the next level down is, let me look that up, 1775 is the next level we want to monitor. So I will put a line there just to have it. Okay, and I'll just move my stop down there, or my target down there, to have it there. Okay, so like I said, it is looking like it's getting a little more two-sided. I don't want to, and getting out here wouldn't be the worst thing you could do, because again, you are getting at least some evidence. I just feel like let's make the market prove it a little more. Let's make some let's let some buying come in and you have some follow through. And so we did have some buying come in here, but let's have some follow through above. Let's give it a point. So that's what I'm doing. I will let me. It's getting long, so I'll pause this again and come back. Okay, so we're getting even more follow through here. With another level 3 selling bar. So I mean that's a great sign that this thing wants to head lower. It still needs to kind of get through there. So what I'm going to do is I'm just going to bring my stop down a little bit more, take it a point above the high of this level 3 bar here. So the high of this bar is at 27. So again, in theory, the high that should hold there at 27. If it doesn't, I'm going to lock in a decent profit there. So we'll just kind of wait and see. I guess I'll pause the video here and start it again when there's more information. Well, actually, yeah, I'll pause it. All right, so we're starting to get a little more buying that's starting to come into the market here. Level 3 bar, buying bar there. So, at this point, I've got a pretty nice profit there. So I'm gonna. And again, this is the first sign that we're seeing a buying. So again, what's that at 26? So I'm going to put it at 27 there. Just kind of see what happens here. Hopefully this can reject again like the one prior did, and we'll just keep heading lower. But again, here's the structure. The latest big structure I have to work with is this level 3 buying aggression bar. So I think this is pretty good evidence to work with. Okay, there's another one. Okay, so why don't I... Two level 3 bars in a row. I'm going to just put my stop 2 ticks above that, so that it's basically 26. I'm going to put my stop at 26.50. That something. There's some major buying coming into the market at this point. If it quickly rejects, great. Otherwise, I'm just going to lock in some profit here. We've got a nice move. I mean, for my style of trading, this is a nice move here. Basically 6-point move on the final. I'll take that every day of the week. So I'm kind of ready to unless this market can sell off hard. It's just starting to see a little bit of some buying coming in. I could be wrong. This thing could go make new lows for the year, for all I know. But whenever I see that kind of buying come into the market, makes me a little bit worried, especially when I've got a nice profit locked in already. So we'll see. Yeah, like I said, if this thing can start selling off some more, all the better. But we'll see. I guess I'll pause it and come back when there's more to talk about. Okay, so there you have it. I got stopped out, but I'm very content with that trade. We'll see if I was right or wrong, if I should have stuck it out a little bit longer, but I'm content with that trade. At least I'm not doing it based on gut. There is actually some evidence that buying's coming in, and we will wait and see. But hopefully that makes sense. Like I said, check out some more of the videos on the site if you're interested, and we'll talk soon. Thanks for watching.